Markets Now is brought to you by Durastack Trait Technology, the latest innovation from Syngenta. Available for the 2027 season, Durastack technology features 3 powerful modes of action to outsmart, outmaneuver, and outmatch corn rootworms every move.
Welcome to Markets Now. I'm Michelle Rourke with Jim McCormick of agmarket.net. I'm also a higher day in livestock and soybean futures, lower in corn and wheat. Let's start off talking about the soybean market. We did see a recovery today, and how much of that was tied to some of these rumors that maybe China might be looking for beans off the PNW.
That is the talk right now. China's snooping around for some beans. The question, Michelle, is this final buying of the 12 million metric ton that President Trump and them had the commitment for them to buy back in the fall, or is this part of the 8 million metric tons that President Trump had encouraged them to buy a few weeks back? There is no clarity from the USDA or from the Chinese of what's going on, but it's a good sign to see them in the market. We do need that demand.
Well, and we keep talking about the fact that it's economically not feasible for them to buy right now with soybean prices in Brazil so much cheaper than ours, right?
You're 100% right. Remember, that 12 million they bought, Michelle, that was a political buy. They bought the beans, it was a quid pro quo. They bought the beans, we bought their rare earths, they bought our chips. This is kind of an extension of that, I believe. So that's why it seems like maybe they are going to do it. President Trump is going to be here in China here in a few weeks, so it does make sense that maybe this deal will get done. We do need it to get done because right now, even with the 12 million metric tons that China has bought, that we believe, we're not going to hit the USDA's current export goal. If they would buy 8 of it, 4 of it would just help us match the original export target we have right now. So let's hope the deal gets done.
Yeah, absolutely important, but certainly there's been a little concern that with the IEEPA tariffs struck down by the Supreme Court, that China, we don't have as much leverage with China with that 8 million metric tons and beyond.
That's really the question for everybody right now, because when it was struck down, now the question some of these countries had, remember, some countries made a deal. They said, hey, you lower our tariffs, I will invest in the United States. There was other countries that had higher tariffs that did not make that deal. Now with what's going on, how I understand it, everyone has the same tariff. So now the question, these countries that had said, hey, I got the lower tariff for investment in the United States, are they going to want to renegotiate that deal with President Trump? He's asking them not to, but politically for their own people, they're going to have a hard to explain to their people while they're investing in the country to get a lower rate, but maybe a competing country does not have to do that.
Specifically on China, though, does the U.S. have less leverage against them now, do you think?
Well, I think it has a little bit less leverage, but the fact of the matter is this, Michelle, both gentlemen need each other. And what I mean by that, President Trump's ratings are not the best, let's face it. When you look at approval ratings, his base is the farmer. The farmer is very upset about the trade war, so he needs these beans to go there. On the other hand, Chinese economy is still incredibly weak. You've seen some purging of the Chinese military leadership, so it says to me that there's some uncertainty going on in China. So I think both of these gentlemen would like to have this deal extended another year so they can kind of take that off their plate and deal with the other challenges that their countries are dealing with.
The November contract, even the old crop contracts have not been able to take out the November highs. So we need confirmation of that China business to be able to take out those levels, right?
I think you need to, because like I said, you need those buys to hit the current USDA's target. So if we don't hit, the China does not buy, this market looks like it's overvalued. And I would argue it is a little bit overvalued, because you got to remember, the prices rallied up as the Chinese got priced into the market, but what we're doing, we're pricing everybody out of the market. Brazil's selling beans roughly $1 plus below our price, so anybody else who wants to get a deal are not going to come to the U.S. shore, they're going to come to the Brazilian shore.
We also got help from soybean oil scoring more new contract highs. We've seen this for several sessions in a row. This is biofuels hopes, but now we're talking maybe the RVO proposal might be headed to OMB, is that right?
That's what we're hearing, going to OMB, then it goes to the White House, and then you get your 60-day comment period. And then we'll see where it's at. I'm a little bit skeptical where this all plays out. Michelle, we've bid a lot into this market. Bean oil is making a lot of move. I am a little bit leery of a classic buy the rumor, sell the fact. If it does not come in as positive as the bean oil market's pricing, time will tell. But it's good to hear it's going to the OMB, because we're going to get some more, get our teeth into what actually they have decided to do.
Yeah, I wondered how much you thought we had priced in. I'm glad you covered that. So let's talk about corn and wheat sitting back here today, but corn, we're going into first notice day at the end of the week. Are we going to continue to see farmers selling? Is that what capped us?
That's what's capping us right now. If you are long the board, you got to get out or you're risking delivery here on Friday. The problem with the farmer market is if they got a basis contract, they got an HTA, free DP, and it's against the March contract, they've got to make a decision. Are they going to roll those positions out to May, or are they just going to price the grain? A lot of them are pricing the grain plain and simple because they do need the money for this time of year.
Yeah, the wheat market kind of helped corn or held corn back today too, did it not?
It did a little bit. Wheat market's been on a tear recently. The funds are short a lot of wheat. It's been been essentially a bear trench market. With this uncertainty that's going on in the Middle East, it seemed like it just unnerved the fund positions that I just don't want to be short wheat if something gets out of control in the Middle East. That brought the wheat market up, and that seemed to stabilize the corn and brought the corn off the lows. But corn is running into a huge selling by the farmer, and that seems to be capping it, at least near term.
Well, when we talk about the funds, they're very short in all three classes. This setup is very classic to what we saw in 2022 when the Black Sea War broke out, and we had that huge, big rally, right?
Exactly, and I think that is why the funds are getting out. Now, I'm going to tell you, Michelle, I don't see that move happening like we saw in 2020. The main difference is, remember, Russia was invading the breadbasket of Europe, and there was a real fear of would any grain get planted, would any grain come out of the Ukraine. This is a bit more of a situation of logistics, and essentially if this war got out of hand and they shut down the Strait of Hormuz, it's going to drive the price of energies up, and it's going to drive the cost of trying to get food to the Middle East, and that is why I think the funds are like, I just want to step aside until I get some clarity of this situation.
So, little profit taking today then, perhaps?
A little bit of profit taking today. You got the State of the Union address coming, a little bit of uncertainty what President Trump's going to say. So, if you've caught the rally here recently, you made a nice little money if you're long. Maybe that was reason enough to take a little bit of profits before that speech comes out.
And no weather premium, you think, right now in the market in the wheat?
Not a little bit. I mean, it's very dry out there, but let's face it, it's February. So, it's something we need to keep an eye on going into it. There was interesting a note saying it was been so bitter cold in the Ukraine. They are worried about how long it's going to take for that ground to warm up in the Ukraine this upcoming spring.
Gotcha. Cattle market, we had a couple days of profit taking, and I know the stock market was down yesterday, so that was part of the problem. So today we're back up. Why? Just because outside markets were more stable?
A little bit more stable. Also, consumer confidence came in a little bit better than what people were thinking. And, optimism, maybe what President Trump's going to say, in the State of the Union address. But in general, Michelle, the supply of cattle is very, very tight. The consumer continues to like his beef. What can you say? They're willing to pay up for it. And right now, the goal of the market is to essentially get prices high enough to kill off demand, plain and simple. And then what happens is that kills off the beef demand for beef, but then that just shifts it down to maybe poultry or pork, which is supporting those markets.
Yeah, cash market has been continually grinding higher here. That was true last week. Do you think we can get above 250 here this week?
I think you got a shot right now. I mean, plain and simple, like I said, the demand's there, the supply's tight.
We had boxes up over $6 on the choice at noon. So is that demand or just these very tight numbers that we're seeing in terms of slaughter pace?
Actually, I think it's a combination of both. We do have that Greeley plant. You got that debate about will they go on strike, and then there is also a facility, a feed yard down in Texas that says they are shutting down. Plain and simple, they bring a lot of cattle in from Mexico due to the Mexican border being shut. They are forcing them to essentially close down operations simply due to the lack of cattle.
And the Greeley, Colorado plant, they did not go on strike, but that story's not over yet.
It's not over. They've essentially agreed to go on strike if their demands are not met.
Hogs up for a sixth day. Is this all fun buying or what's driving it?
I think it's fun buying. Hogs are in a heck of a tear market. We saw a nice correction in it. I think it was more of a technical correction, a bull market. Now we're going back up. Same storyline. Demand, demand, demand.
All right. Thanks so much as always.
Thank
Jim
you.
McCormick joining us with agmarket.net. And that's Markets Now.
With corn rootworm costing farmers up to $1 billion a year, you need the right strategy. Introducing Durastack trait technology, featuring 3 powerful modes of action to strike corn rootworm at full force. Outsmart, outmaneuver, and outmatch their every move with the industry's first triple BT protein stack built for corn rootworm control. Take back your yield potential. Make your move at Durastack.com. Available for the 2027 season.